The Bitcoin halving is not yet priced in. There is still room for 100% gains before the Bitcoin halving, and I'm going to tell you why. And the New York Fed just keeps thinking up reasons why everyone should be using Bitcoin and not the broken legacy banking system. And let's start off today with announcing the winner of the $300 Bitcoin giveaway. So let's go over to the old YouTube random comment picker. Let's give it a spin. And the winner is Paul Adams. Congratulations, Paul. Free Bitcoin, yeah. $300 of free Bitcoin. Yeah. Thanks again to Trust Wallet and Unstoppable Domains, of course, for this giveaway. Now I'm going to show you just how crazy easy it is to transfer Bitcoin using Unstoppable Domains. So just open up the Trust Wallet, click Send, type in pauladams.crypto, and voila! Is gone. Very cool stuff. Link down below if you still need to get your Unstoppable domain. And again, congratulations to Paul and thank you to everyone for participating. Now let's get on to today's stories. And the first one is a lesson why to never trust the legacy banking system. As if we really needed more reasons to not trust the banks, but hey, anyway, that's what we're going to talk about today. So check out this headline here. U.S. warns Iraq it risks losing access to key bank account if troops told to leave. Wow. Particularly Iraq's account at the New York Fed. Make no mistake, this is economic warfare, and a country like Iraq will always be on the losing end of that battle when using the dollar, because it is not their money. It's so crazy. Iraq risks losing access to its NY Fed account, and most importantly, the money that is contained in that account, which is a real just kick in the balls, isn't it? Not only are they going to be cut out from a major global financial institution, but their money could be held indefinitely. Or they let foreign occupying troops remain in their country. One or the other. Thus the old saying, your bank, your money, not your bank, not your money. Obviously, this could result in massive financial difficulty for Iraq since a lot of their money from oil sales is sitting in that bank account. This is the face of financial terrorism. It wears suits and has offices. Scary stuff. Ownership of funds is insanely important. And this is not the first time we've seen this kind of stuff playing out. For example, there are the gold seizures by the Bank of England, whereby they decided to hold on to $1.2 billion in gold, which belongs to Venezuela. And at the same time, the New York Fed also cut off the bank accounts for the country of Venezuela. More than 200 central banks, governments, and international official institutions hold accounts with the New York Fed. Every single one of them is at risk. The NY Fed and the US government have proven time and time again that they are willing to use these levers of financial control to punish people. And increasingly, countries will move away from doing business with the USA and doing business in dollars. We're already seeing more exchanges of oil for Chinese yuan. Then, of course, there's the European SWIFT network alternative. And with projects like the rumored Russian gold-backed crypto for oil settlements, the power of the dollar and the global supremacy of the dollar will be increasingly under threat. Although none of these solutions that I just mentioned actually solve the real problems at hand here. More trade in yuan, well, that just allows China to become a giant financial power and then act like a financial tyrant. A Russian gold-backed cryptocurrency, well, that relies on Russia being willing to give you the gold when you cash in those tokens. And a European SWIFT network, well, that would just give Europe, not the US, of course, in this situation, the deciding vote on who gets excluded based on the politics of the day. You know what the right answer is, of course. It's Bitcoin. Of course it's Bitcoin, guys. Surprise! It's Bitcoin. Of course it's Bitcoin. Now, we have already seen Bitcoin used to settle international payments. It just has not happened at scale yet. The real question is, when will a country actually take the leap and start settling international payments in Bitcoin at scale? Who will be the first to start accepting Bitcoin for oil? And who will start actually intentionally storing Bitcoin in their central bank as a strategic long-term asset? So, question for you: which country do you think is most likely to really start using Bitcoin? Will it be a country suffering from sanctions or threats like Iraq or Iran? Or will it be somewhere more chill like Switzerland or Japan? Let me know your opinion down below in the comment section. Okay, now on to the main event, the Bitcoin halving. So popular right now, so popular. Now, Tom Lee of Fundstrat says that the Bitcoin halving is not yet priced in and that a 100% gain may just be on the table for 2020 for Bitcoin. And look, 2019 was a great year for Bitcoin. We ended the year around 100% higher than we started the year, which is very impressive for 2019. And of course, we saw the 250% run up before retracing back down, all that fun jazz, but still very impressive year for Bitcoin. So another 100% year in 2020 is really not that crazy at all. Of course, if we're counting from the start of the year, then we may end up reaching $14,000 by the end of the year. And if we just count from today, well, it could be $16,000 for Bitcoin. And while this is the prediction of Fundstrat, I actually think it's a bit too conservative, and that 2020 is likely to give us more than 100% gains from today on Bitcoin. Now, I agree that before the halving in May, we could see a big run up to 14 or 16K even. And as mentioned previously, I do not think that we will cross over the all-time high before the halving actually happens. Post-halving, yes. Before, not so much. We're looking like 6 months post-halving before we see a new all-time high. Not talking about insane valuations. We're just talking about breaking over the 20K mark. We're not talking about $100,000 by the end of the year or anything like that. But Bitcoin over $20,000 by year end seems very, very possible with the way that everything is going. The crazy big numbers, 100,000, 300,000, that comes later. That being said, it is incredibly difficult to accurately quantify whether or not Bitcoin is priced in for the halving. And I don't think that it is. I think we will see a lot of speculation as we get closer to the halving that is going to push the price up to those levels of $14,000 or $16,000. Remember, though, that the supply of Bitcoin is not going to be reduced when the halving happens. It's just the daily emission rate is getting reduced. So a massive slowdown of new Bitcoin entering the market. However, if we are to assume that demand for Bitcoin remains constant at the levels that we're seeing it at right now, or more likely it continues to rise up over time, then a 50% reduction in newly created Bitcoin will inevitably lead to a rise in price. We're talking about the post-halving here. Post-halving, I'm incredibly bullish. You guys know I'm incredibly bullish over all here on the cryptolark channel, but pre-halving, that's a different question. Likely there will be enough speculators piling in on the anticipation of the news of the halving to give a significant price boost. But there are some big factors outside of just the halving hype, which are driving the price of Bitcoin up, up, up. Such as geopolitical tensions. And I'm not just talking about the safe haven speculation asset here in times of war and all that jazz. But I'm talking about exactly what the first half of this video is about. The more we see sanctions and other forms of financial tyranny being deployed, the more we will see citizens of affected countries, and yes, even at some point, perhaps the countries themselves, moving in to Bitcoin, acquiring Bitcoin. This has been going on for a while, of course. A lot of miners in Iran, a lot of miners in Venezuela, regular people doing that, right? State level actors only starting to trickle in. The network itself is stronger than it has ever been. We have new hash rate highs, which just keep on coming all the time. We have new miners, which are more powerful and more efficient than ever before. New investments into new Bitcoin mines, they just keep being announced all of the time, and they continue to be bigger and better than the one before that. It's crazy. And all of this has happened in like the last 6 months, during which time the price of Bitcoin has declined by 40%. While retail investors may have been shaken out during the price correction, the big money players are doubling down on their investments, particularly related to mining. Follow the money. It always leads to the truth. That being said, miners will be hit the hardest by the halving event when it happens. While fees will stay static, the 50% slash in revenue from block rewards will indeed force many smaller operations to potentially have to shut shop, assuming that we do not see a significant rise in the price of Bitcoin post-halving. Although the influx of Bitcoin options contracts may just give smaller miners more ways to hedge themselves in the months following the halving. So what do you think? Is the Bitcoin halving priced in? Do you think that we could see a 100% rise in the price of Bitcoin before the halving? Not talking about by the end of 2020, but before May in the halving. Let me know down below in the comment section. As always, super keen to know what you think on these topics. And thank you so much for watching today's video. Seriously, you guys are totally awesome. So thank you so much for continuing to come here and watch the videos and support the channel. It means a lot to me. So thank you so much. And if you did enjoy today's video, hit that thumbs up button. YouTube, man, they love these things. Thumbs up, YouTube. Gotta play the game, man. Gotta play the game. And of course, subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.